Hello, everybody. Welcome to the final video that we'll be recording here in 2021. Um, I thought about a few different things we could talk about, and it all sort of came back to, what is Bitcoin and Ethereum looking like right now? How are these two top projects in cryptocurrency looking heading into 22 here as far as, circulation, daily active addresses, funding rates, MVRV. We're going to touch on all of this, and I'll try to be as comprehensive as I can, considering, we didn't have a This Week in Crypto call today. There are tons of questions about how everything stands and what we should be paying attention to for when things turn around. Obviously, it's been a bit of a slide for the majority of December. Bitcoin is just above 46K right now. Ethereum is just below 3,700 right now at the time of this recording. Here on Pacific time, I'm about 10 hours away from the new year. So really, we're just going to be looking at whether there's some bullish divergences that are starting to form, some capitulation from people sentimentally, and try to go over all of the most important 10 to 12 leading indicators for both of the top two assets here. Obviously, Bitcoin is going to really carry the torch for everything else going into the new year, as it always does. There's always speculation that there will come a point in time in crypto where Bitcoin is not going to be the end all be all in terms of if it's healthy, the markets are healthy. If it's overinflated, the markets are going to dump as a result. But for now, that's still the case. And even with Bitcoin being around 12 plus years now, most trading pairs are, of course, connected to Bitcoin. Therefore, anytime someone is trading into XRP or Cardano or Polkadot or Solana, anything, there's usually some connection to Bitcoin that occurs anytime a trade happens. And that is why so much utility really revolves around the number one asset. But I digress. I'm going to jump into Bitcoin right now, beginning with circulation, and give you guys a quick update on exactly how we're looking. It's, of course, been a bit of a decline since the very start of December. You'll notice this pale line here in pink giving us a 7-day smooth moving average of how circulation is looking. I'll back it up to 6 months for the sake of this analysis here, just to give a little more context. And you can clearly see when there was a peak here, right around the end of November, we were getting a couple of really gaudy numbers where circulation was exceeding 297K on November 25th and over 300K. It looks like, okay, so these are actually 4-hour candles, and that's why. But no, I take it back. So 24th was 297, and then the 25th, 26th was over 300K for the first time. That being said, this is where things kind of peaked. And then you can see, we started to have a little bit of a lull here going into December. And then look at this big plummet in circulation. Now, all things considered, we're still well above where we were in, beginning of July, all the way through, early August, even up to late September. We're above all of this still until things really started to churn going into early October, where we hit that first all-time high, leading up to the second all-time high in early to mid-November here, where it got above 68K for the first time. But long story short, circulation is looking pretty good, but not spectacular. We have an NVT model that I showed in one of our recent videos that indicates that we are still in semi-bullish territory. When comparing where our circulation looks for Bitcoin compared to its overall market cap after this big decline from the all-time high about a month and a half ago, where prices have dropped about 32.5% since, circulation is looking okay. We haven't plummeted back down to here, but prices have plummeted. So circulation has, according to our model, stayed in a fairly healthy spot. So that's something to remember looking at our first one. Related to circulation, I'm just going to jump right down to daily active addresses for a moment here. Also full screen it, make it a little easier. Daily active addresses is looking pretty good. I will add a 30-day moving indicator to this one here in pink you see, and it's pretty clear that things have more or less plateaued. And that's actually okay because similar to circulation, if daily active addresses stays in a pretty good spot while prices drop, that's actually a semi-bullish divergence at minimum forming. And when we see obviously that 32.5% price drop occur while daily active addresses look okay, it's a good sign that people aren't becoming completely stagnant and many addresses are still engaging with the BTC network on a daily basis. So for the same reasons that token circulation is looking semi-bullish, this would be about the same indication. Unless we see a big drop off and things start to look like they did in July again, I wouldn't be incredibly worried about the amount of utility going on. So we've covered circulation, we've covered daily active addresses. They both look a little better than average considering the price drops that occurred without the drop in utility occurring to a significant degree. Now we'll look at MVRV, which is one of my favorite metrics. Particularly the 30-day MVRV can give us a lot of insight as to what the mid-term swings will look like going into 2022 and beyond. We've been in mostly a good opportunistic territory without a lot of gains happening other than perhaps, the 20th through right after Christmas here, a week later, we did get a nice gain of about, looks like about 12% 13%, excuse me, at its peak, while the MVRV was telling us that we were in a big opportunity/buy zone. So once that 13% peak happened, look how MVRV kind of moved into positive territory. Positive would be bad, meaning it's a little more risky than usual because the average trader over the past 30 days is actually in profit once again. And as soon as they started to get into profit, that's when the big plummet occurred, sending the MVRV back down to where it is now at about -5%. Now, for those of you who've seen many of our previous videos, we like to look at around -15% as the you really need to buy now zone, solid opportunity to buy at a low risk, essentially. And then plus 15% is, as you would expect, the exact opposite, where it's a sign that people tend to get a bit too euphoric and they are very, very much in profit. So greed starts to take over. These are the signs, right here when we hit that all-time high and the MVRV got all the way up to 21%, back here, it got all the way up to about the same 21%. These are the times when you typically see the corrections occur and prices start to be a bit dicey and things get volatile. Now, yes, we did send the MVRV back down to neutral at one point, and it got a little high here again before correcting. So 15% certainly isn't something that you just want to sit and wait for and say, well, if it's under 15%, there's nothing to worry about. But anything over zero, basically consider it the higher it is above zero, the more risky the price will maintain those levels until some event occurs to either just send the price down or traders start to, take profit like crazy on their own without the price. But more often, we'll see a big price correction send the MVRV down back to zero and oftentimes into negative. So overall, MVRV, where it stands now, is at -5%. This is about a third of the way toward that buy/opportunity zone. And we would call this a semi-bullish indicator. It means that we aren't in a super duper bullish zone where it's just obvious that things are going to turn positive soon. But at the very least, it's indicative of the fact that if you were to open a position in Bitcoin right now, it would be a better than average time to buy compared to historical moments in Bitcoin's history. Moving on, let's talk about social volume and social dominance. Super interesting what's going on here. Let me change this to filled area and filled area. It's pretty noisy. We'll actually just make it 7 days and try that again. 7 days. That should be fine. I'll even zoom out a tiny bit to last year. Okay. So, of course, ignore the current date that we're on right now, 31st. This is incomplete data and things are still compiling. So we always advise looking at the last completed date. In this case, we're looking at full weeks at a time. So this is basically the social volume and social dominance between the 23rd and the 30th right now. And it's pretty clear looking at social dominance. If we took like just a 7-day moving average of these weeks, we'll even go a little further. We'll say social dominance of moving average 30 days. There we go. So this gives a pretty clear picture of what's been happening with social dominance for Bitcoin over the past year. Things have mostly dropped to pretty surprisingly low discussion rates for Bitcoin. Social dominance, for those who don't know, it basically measures the percentage of discussion related to Bitcoin on the 5 platforms where we scrape data. That would be Twitter, Telegram, Reddit, Discord, and some pro traders chats, to give us an indication of what percentage of discussion is related to Bitcoin versus the top 100 assets. So you can see at peak, things were being discussed at a very, very high frequency, and the dominance was over 40% for Bitcoin compared to all of the other 100 assets out there. Now, we're looking at about 14.2%, so just over about a third of the rate of discussion compared to about just under a year ago. This is significant because it means that with the 2021 that we just had and altcoins really just booming and being a huge presence, drawing a ton of interest from the trading community, that means less and less focus is on the number one asset in crypto right now that really holds everything up. And largely that's more concerning than it is exciting, because it's telling us that all of those assets with much smaller market caps are getting the lion's share of the attention, and so much money is being funneled into it that means less of a proportion is being funneled into Bitcoin. And whether it's actual market cap or just social discussion, when Bitcoin tends to not be discussed as much, it can be a sign of a correction. And perhaps, it can be argued that that correction has already started, whether it's a result of the lack of interest or a combination of many things. But you can see over time, this is the last 3 years of Bitcoin, beginning at the end of November and going into early December, that was the lowest discussion rate we've had over the last 3 years. And it probably goes even further. I'll check that out in a moment. But right now, look at the 30-week smooth moving average here. It's never been this low, at least in these last 3 years. Let me jump out to, let's say, last 8 years, go super granular, and just look at this line here. Look at how social dominance was such a steady presence when, of course, there were many, many less crypto assets out there in 2013 compared to now. And just look at how it started to recover in 2018, beginning in 2018, going all the way up to the end of 2020. And of course, we just went on that huge tear between the end of 2020 and Q2 of 2021. But right after that all-time high, or even already beginning, look at how the smooth moving average of dominance was beginning to decline. Now, social dominance, on the other hand, shows that it's been growing, and that's because crypto just had an amazing year overall, despite this recent correction. And there are many more faces and discussion groups and circles of interest relating to crypto overall. So even though the dominance is going down, the fact that social volume is going up, and it just saw a new peak again here in early December, that's a nice sign that crypto overall is looking okay. However, from a overall market perspective, there may need to be some event to draw the attention back to Bitcoin, whether that's Bitcoin going on a solo tear without altcoins following, which is super rare these days, or Bitcoin plummeting, causing everyone to start moving their assets back into the less volatile Bitcoin and discussing whether Bitcoin has sustainability. Those are the kind of things that are going to start to bump up the discussion again. The last time we really saw the dominance spike was, when we were making all-time highs just about a year ago. This was an all-time high at the time at 37K before it had a minor correction. And then the bigger all-time high happened, but without nearly as much social dominance up here because other altcoins were just going absolutely nuts and overshadowing the event. So keep this in mind. I know that's a pretty beefy explanation about social dominance and to a lesser extent volume, but just note that there's a bit of a discouraging look here right now in terms of what social volume and dominance are doing. And I'm hoping to see an uptick in dominance at some point soon so that all of the attention doesn't continue to be on altcoins, because that can very often lead to a collapse. We'd call this probably semi-bearish to very bearish, in my opinion, because social dominance is at a pretty historic low right now. Moving on to funding rates. So funding rates are, of course, very important. Let me just zoom into the last 6 months again. Funding rates on Binance and FTX always tell a pretty nice story. We'll start with Binance. You can see there were two distinct moments over the past 6 months where people were becoming very euphoric and basically skewing the amount of longs to a high degree compared to the amount of shorts going on. When you see these high yellow funding rates, I'll just take off FTX for a moment. When you see these high yellow funding rate spikes, that's indicative of longs paying shorts to an excessive degree. And that can very often be a warning sign that there's a bit too much euphoria, and liquidations tend to occur when we see these huge spikes above 0.05% or even right here at 0.08%. These are pretty atypical to get this high. And when they do, you can kind of view it as like MVRV, where it's at that danger zone at that point, say over 0.04%. I'm just estimating would be around the time that you really want to start paying attention to the funding rates getting a bit too high, because there are so many leveraged longs out there trying to capitalize on the already surging prices, typically. On the flip side, look at what happened back in June, July, right after a May correction that sent the price plummeting, got all the way down to below 30K at one point before quickly correcting. And look at how many people were shorting at the time. So all of these people who said, okay, we think Bitcoin's going to just keep on going down to below 25K, below 20K, maybe even into the 15s. They were all getting liquidated here, especially right here. There was this was a big jump on a single day between the 25th and 26th. And everyone said, oh, that jump is fool's gold. We think it's going to go way back down. And everybody was shorting. Of course, I'm exaggerating when I say everybody, but a very high percentage of people were shorting compared to longs at an atypical degree. And they all basically got liquidated until the funding rate started to neutralize here. And when all those shorts went away, that's when the actual price drop occurred one last time before we saw this big rise once again. And that's when things started reversing and everyone was longing once again. So this is very cyclical. Typically, the times to buy are when other people think to an excessive degree the price is going to move down. You want to take profit when other people to an excessive degree think the price is just going to continue rising. And as of right now, we're mostly seeing a whole lot of nothing. It's mostly flat. And when it's mostly flat, historically, that's a better sign than average, believe it or not. This isn't just a neutral indicator. If there's no excessive funding rates going on in either direction, historically, the prices have been able to marginally go up until things start to look like this with these kind of spikes once again. Also notice how there have been a few brief moments where people have tried shorting the markets, and in most cases when they short, it doesn't go too well. So even though it's mostly been flat over the past month here in December, the occasional notion for people to have is that the price is going to go down, and that's a good sign because it means people are waiting for a moment where perhaps things go a little bit up so they can put in another round of excessive shorts, which can potentially get liquidated. So the crowd is clearly semi-bearish right now, if not neutral, but I would call this more a good thing than bad thing. Maybe very barely on the semi-bullish side, but more close to neutral at the moment. And I'll show you FTX really quick as promised. So this is FTX's funding rate. Let me get it on filled area so you can see the positive versus negative line. And it's about the same, if not a little more concerning than Binance, because FTX, you can actually get 1 hour data, so I can make this super granular. There's a little more frequency in how often the funding rate is updated on FTX, about 8 times as frequent as Binance's 8-hour frequency. And you can see that with that higher frequency, there's a lot more opportunity for funding rates to show something other than just flatness. And I'll zoom in here quite a bit just to give you a better look at what's going on. And for the most part, FTX in the month of December has been in positive range, unlike Binance. So with that, every single hour, you might get something like a really high funding rate here, followed by a really low one here. And considering most of these spikes are in positive range, I'd call this a bit concerning, because people are defiant of the fact that prices are going to go down on FTX, and they're putting in a larger degree of longs than shorts at the moment. It's not significant compared to like what FTX sees at its real peaks here, when the funding rates go above 0.03% or so. But it's something to be a little bit concerned about. So when you combine both FTX and Binance together, Binance alone looked maybe just slightly bullish, but I'd call FTX kind of a cancel out for the funding rate perspective overall, because of the fact that they're looking a bit overly bullish when they probably, considering the way the prices have looked lately, they probably don't need to be as bullish as they are, but people can do what they want with their money. And people really believe on FTX that it's a good opportunity to buy the dip. And if the crowd believes it's time to buy the dip, it traditionally is not yet time to buy the dip. So call it a neutral signal overall for funding rates. Moving on to mean dollar invested age. I just recently covered this, but overall what this does is it will show the amount of dormant tokens or investments that are moving on the network. And when the mean dollar invested age is moving up, that means that the dormant investments are kind of sitting idly by, not really moving a lot. When things are moving down, that means either profit is being taken, or some tokens that haven't been touched for a while are starting to move around, which is a good thing. Typically, we want to see something a little more sustained than this to really indicate that it's going to be a bull run. But even with this, during this volatility, if you were to relive late October and you're starting to see a declining mean dollar invested age, it's a pretty good indication that things might climb up a little bit more, which is exactly what happened. We saw that new all-time high in mid-November, and then the trend was mostly just a constant move up, other than this little blip here. So that means the dormant investments are starting to add up a little bit, and the average age of the dollars invested in Bitcoin is up above 260 days now. To zoom out we'll do like the last 5 years. It becomes pretty clear how the pattern here can really dictate when those bull runs occur. You can see the major one that started back in January 2017, and the dormant tokens and investments were really, really moving around, going from an average age of 413 to a base of just 64 days, which is insane. And look at how that occurred pretty much right on the day of the all-time high, that all-time high back then, December 17th, 2017. And now, right afterwards, of course, things started to climb. And, if you were using mean dollar invested age a lot back then, you likely could have seen the writing was on the wall that the price would just continue to fizzle out until we saw another drop in mean dollar invested age. And that was sort of already, that next bull run was starting to occur. And this essentially confirmed that dormant investments were moving once again. So we had that little bounce here, got up to about 12.5 before, after a little more run with mean dollar invested age going down, the prices started to drop. and mean dollar invested age grew and grew and grew. It peaked up in October 13th, 2020, where mean dollar invested age was up to over 430 days on average. And then look at how this mean dollar invested age drop just absolutely coincided with the price surge here, going from 430 all the way down to 179. So a new all-time high was made during this mean dollar age drop, and ever since then, in April 2021, from a zoomed out perspective, it's been mostly just dormant investments going up again, which is concerning. Yes, we had a new all-time high that occurred ever since then, if you stuck around until November, but it's been volatile, and it was a very brief all-time high followed by a big drop right after. So this is what typically occurs when dormant investments are starting to rise once again in age. And until we start to see a plateau, at least for like a week or two, it's going to be a little bit dicey for Bitcoin's price. Of course, it's not just one metric we would look at, but this is kind of more of a validator. And mean dollar invested age right now would basically be considered semi-bearish right now. It's not just a huge rise like this without any sort of noise in the middle, because we do have some noise, but it's not moving in the direction we would want to justify that a bull run is around the corner. Moving on, we'll keep weighted sentiment very brief. It is mostly looking to be a bit fearful right now in terms of the trader perception of Bitcoin. And that is a good thing. When you see that the weighted sentiment is below the neutral standard deviation, it is an indication that there is some FUD going on, fear, uncertainty, doubt. When there's fear, uncertainty, doubt, you want to capitalize on that. Just like the famous saying goes, blood in the streets is the time to eat. You want to try to get in when these types of negative perspectives of Bitcoin are occurring. Obviously, the biggest one in recent times was Black Thursday almost 2 years ago. And you can see that perfectly marked the bottom before absolutely going on a tear over the next year or so. However, we're not in any sort of major, fearful time right now where, it's below a -2 standard deviation. So this is more or less a semi-bullish indicator for Bitcoin right now. And we'd like to see people get even more fearful to indicate a very clear sign of an imminent turnaround. But for now, it's at least a good sign that people are starting to worry, and there's a bit of a sign of capitulation forming. All right, whales. So one of the most important metrics in my mind would be whale activity. I'll zoom in here to the last year to show you exactly what the 100 to 1,000 tier of Bitcoin addresses are looking like, the 1,000 to 10,000 tier are looking like, and then here in gold, it's essentially splitting the difference. It's combining the 100 to 1,000 and 1,000 to 10,000 coin addresses out there to show what their percentage of supply held is right now. And with the removal of the pink and red lines, we can focus in on the gold line and very clearly see that back on October 25th, this tier of whales held their most. I believe it was an all-time high, or at least the most in over 5 years. So more or less an all-time high. They were holding about 49.5%. And if we look today, they're holding about 48.5%. So they've dropped about 1% of the total supply of Bitcoin, and that is an enormous amount. I won't do the math on how much USD that is, but it is definitely in the tens of billions, I believe. I'm sure you guys will fact check me and see if it's even hundreds of billions. Either way, the decline here has been a concern, and notice how, yes, an all-time high was made a few weeks after they began to take profit, but overall the trend has been down for the price of Bitcoin as they've taken profit. If I look at like the last 3 years here, you'll see that there are some pretty interesting correlations. They were taking profit way back in May, starting in May 2019, and shortly after, about 6 weeks later, the all-time high was hit, followed by a big plummet. and then a big addition in the supply, and things kind of stayed volatile until they took profit, right around Black Thursday. And after the price started to rise, the whale said, okay, we're going to get back in now. And it's been basically an accumulation fest ever since for about a year and a half until late October when they've started to take profit again. Now, this perspective does give you an idea that the whales are not dumping to severe degrees that are going to put them in jeopardy of being at like 3-year lows or anything. So this is kind of a mild drop more than anything, but it is still probably the most sustained drop that we've seen since that April all-time high occurred, where they were already dumping their bags prior to the big mid-May drop that saw the prices eventually get all the way below 30K. And I'd call this concerning because the largest tier of retail traders that are active with their trades clearly are taking some profit right now. It doesn't necessarily mean they're expecting Bitcoin to drop below 40K or 30K, but it means for now they want less in their bags. And when the whales who dictate the markets want less in their bags, and they're giving it to the smaller addresses out there that are unknowing of what the large addresses are doing, it's a concerning sign historically. So this is not semi-bearish, it's just a very flat out bearish indicator for Bitcoin right now. And it's something that I myself and the rest of Sentiment would advise paying attention to see when there's a turnaround, because the price has already dumped plenty as the whales have dumped. And if there's a further dump, you may want to be prepared for even further red weeks and months. But if they begin to start accumulating right at the beginning of the year and they say, okay, 46, 47K was about the price I was waiting for, that could be a very clear indication that it's time to get back on the train. But as long as the trend is moving down, it's a red flag and something to be very, very mindful of. We'll skip the DAA divergence. I'll just say that it is looking better than average again. This is simply a signal to give an idea of historically whether daily active addresses are above where prices indicate it should be or below. And right now we're getting better daily active addresses than we typically would expect compared to prices. So that's a semi-bullish indication. Network realized profit loss. I just posted about this on our Twitter. It's more or less looking neutral, but we have seen a lot of drops. Let me zoom in a little bit because we're a little too macro at the moment. Last 6 months, we have seen quite a few drops on the minor variety over the past week or two. So that's a sign that the network overall was trading at a loss. And when the network's trading at a loss, it's typically a good time to get in, just like we saw right here at the price bottom back on December 3rd. These would have been the golden opportunities to buy and take a little profit right before this, when we saw the biggest high point where the network was trading at a gain, and that would have been the time to sell. But for now, it's been mostly on the negative side, which is a good thing. We're still kind of in flat/negative territory, which is a good thing, of course. Just like MVRV or weighted sentiment, when you see other traders having pain and they are trading at a loss themselves, that's typically the time to buy. But it's relatively minor. I'd call it just barely semi-bullish according to this metric right now. Exchange flow balance kind of works the same way, where you want to see more outflows than inflows. And we did see a big outflow here, but there hasn't really been anything sustained. We don't see any major outflows like this or outflows like this, which would be a very good sign for Bitcoin's future. Pretty much look at the largest spike and whether it's on the high side or low side. And right now, the largest spike occurred back on December 22nd, and it was basically the difference between inflows and outflows on that day was 19,136 Bitcoin, which is a ton. And the price, we haven't seen any major exchange flow balance spikes on the negative side to really balance that out, and the price has kind of gradually plummeted as a result. So wait for a big outflow spike like this, and that would be a good indication that Bitcoin is moving away from exchanges at an excessive degree to basically signify that there is less and less coins that actually can be sold on exchanges. So basically, the more funds are moving away from exchanges, the smaller the risk is of a future sell-off. On a similar note, supply in exchanges has mostly gone down. So you may see that the exchange flow balance is kind of neutral, maybe even a little bit concerning because of that one big inflow spike that we saw about a week ago. But it is encouraging to show that since late July, when things peaked at about 13.7% of Bitcoin on supply, it's been a pretty nice drop, with about 2% more of Bitcoin's supply moving away from exchanges, which is decreasing the amount of risk that Bitcoin's price can have of continuing to plummet, because there is less sell-off opportunity. So 2% drop in supply between July and now, that's definitely a semi-bullish indicator, perhaps even a very bullish indicator. And okay, that wraps up Bitcoin. I know we are really going granular here, but that's kind of the point. I wanted to really give some nice detailed analysis. I'll do the same for Ethereum here. It might be a little bit of a shorter analysis, but I'll do my best to be as comprehensive as I can. Ethereum is looking about neutral over the past 3 months on circulation. We'll take a look at the last year to give a little more context. And the best circulation time for Ethereum was actually right after the drop, when there was just a ton of volatility. People were very polarized about Ethereum and many altcoins out there at that time as to whether this was the huge dip to buy. It ended up not being the huge dip to buy until July 2020, July 20th of 2021. But circulation, if you look at this pink line here, I'll just take off the main bars so you can look at just the 7-day smooth moving average. You can see that it's more or less been down for the better part of, or at least the second half of 2021. And until that rises, it's going to be a bit concerning for Ethereum traders, because we've talked about it many times, the amount of unique tokens moving on the ETH network or any network on a day-to-day basis is a prime indication as to whether there is healthy enough movement to justify further price rises. Right now, the answer is no. And that's why on our NVT model, it's showing a semi-bearish signal. And I would agree with that based on what I'm looking at here. Similarly, daily active addresses, they are looking a little better, and we have seen a bit of a rise ever since late September, when things basically bottomed out. On an average day, if we look at like the last 30 days, we're seeing about 550,000 addresses that are active on Ethereum. It's not as bleak looking as the circulation chart, but it is starting to trend down ever since mid-November, when all-time highs were being hit all over the place. I believe the 10th and 11th is when Bitcoin hit its all-time high, and Ethereum was at its all-time high of around 4,800-ish, right around that same time. And addresses have kind of started to become stagnant ever since then, outside of this one huge outlier on December 5th. But it's nowhere near where it was in mid-May, right before that correction occurred. So I would call this more or less a neutral signal right now. We'll jump up to MVRV now to show that Ethereum is pretty much right there with Bitcoin, where Bitcoin was at -5%. Ethereum's 30-day MVRV is at -7%. So in a vacuum, it is a very slightly better signal for Ethereum right now than it is for Bitcoin on the MVRV side, but it's mostly in negative territory still. So it's been this way for a while. I would advise really looking for a further plummet where it starts to get below 15% here, and that's going to be the ultra buy zone. But If you just hold out and wait for it, it may never get there. So keep that in mind and understand that we may be in a better opportunity zone than average right now to buy. And if you wait too long for the perfect time to buy, you may end up missing out if things correct in a hurry. So that's 30-day MVRV. We'd call that semi-bullish. Social volume and dominance. Social volume is looking pretty good overall. It obviously peaked in late November, early December when it was making a run at rebounding to its 4,800 all-time high, and people were talking about whether things could actually, exceed 5K. Obviously, it hasn't gotten there yet, and prices have dropped back down to below 3,700 since. But overall volume is looking okay. Dominance is looking about neutral as well. It plummeted when, I believe this was around the time when Solana and some other altcoins, Cardano was getting a lot of talk, Phantom. A lot of attention was being moved away from Ethereum. But as other altcoins have kind of faded into the distance a little bit, Matic and Decentraland and some other assets have made all-time highs since, and they've been talked about. But dominance is starting to move a little back up in Ethereum's favor. But overall, over the past year or so, this is pretty much the range that we've been expecting anyways. I can go like a really long-term smooth moving average, and you can see that the line is more or less fluctuating within a pretty tight range. So neutral signal on the dominance end right now. Funding rates, very similar to Bitcoin right now. You can see the Binance funding rate here in yellow. It's been fairly neutral with a few divots of people attempting to short and mostly coming up unsuccessful for Ethereum. On the FTX side, it's more or less neutral as well, especially when you look at these huge gaudy spikes in FTX funding rates that happened back in the early part of the year. And where we are now is pretty much right above neutral. I'd call this too insignificant of a gap between zero and where we are now to call it anything other than neutral. So neutral on the funding rate side, as I said, especially for Binance, when it's just flat like that for a while, that actually may favor slightly in the bull's hands. But more or less, funding rates are kind of stagnant and standing by, waiting for the next move. Touched on daily active addresses already. Mean dollar invested age will give you a 5-year look, just like we did for Bitcoin. And we see that the big drop in dormant tokens and investments moving started in mid-July 2020, and based out at basically right after that big drop in mid to late May. Ever since then, the mean dollar invested age line is starting to rise once again, but not to a significant degree. Look at this kind of rise compared to the rise we're on now. This mean dollar invested age line is looking a bit better than Bitcoin right now, because it's not just resuming the kind of growth in stagnant coins again the way Bitcoin was. So I'd call this semi-bearish, but not bearish the way Bitcoin was looking. Weighted sentiment, looking mostly neutral for Ethereum. I'll put a smooth moving average on this to give a little more cut through the noise. And actually, it looks like over the, on a 50-day scale, the sentiment has actually moved up for Ethereum, which isn't the best. Obviously, right now, we've fallen back into fearful territory, but that's been pretty short-lived. And I like to look at more of a zoomed out perspective, which tells me that things are a little bit bleak right now, and people are still a bit too positive on Ethereum. But considering we're at least right now at this very moment in negative territory, it washes out, and I'd call this neutral. Now, Ethereum's whales are an interesting story. Myself and Dino and some other team members, we've looked at a few different tier lists to give us an idea of some alpha that we can look into for where prices may head next and what the largest tier of retail traders are. I've found some success in the 100,000 to 1 million territory, as well as the 1 million to 10 million territory. But obviously, these are massive. These are like $100 million addresses and even billion-dollar addresses at this level. And a lot of these can very well be exchanges. I can guarantee you a lot of them are exchanges. So, adding something like the 10K to 100K tier can start to scrape a little more of those high-end whale retail traders. It's just a little bit more, what's the word I'm looking for? There's a higher proportion at the very top compared to Bitcoin, where you can see like the 1 million to 10 million coin addresses make up 21%. So that can really skew the data. But I've seen some success by merging all three of those tiers together. Let's full screen it. And really looking at whether there's a rise in the percent held by these very large whales. And the answer right now is not really. It was peaked at about a little over 70% back in early July, and it's fallen to about 69.3%. Not really a major drop by any means. Obviously, when Ethereum was still very young, they were being distributed to smaller addresses all over the place, especially during the flippening discussions that were happening in early 2017. But we are seeing, after people started to dump Ethereum again following the big initial bull run that happened in late 2017 that really got many average Joes into crypto for the first time, including myself, by the way. People have been dropping, the smaller addresses started dropping off their Ethereum, and the whales scooped them up and stayed neutral for a while. And then right before the big bull run that occurred beginning in late 2020, if you would call, before then not a bull run, I'd say the bull runs really lasted all the way up until mid-November, starting in early March of 2020, about a year and a half. But regardless, they really started to accumulate in late 2020 and started to flatten out in June. And obviously the price hit another high point about a month or two ago, a little under 2 months. But the whales aren't really doing much right now other than just very small profit takes. So I wouldn't call this anything really to worry about in either direction. This is more or less a neutral signal for the whales on Ethereum. We'll skip DAA divergence here. Nothing really significant. Network realized profit loss. Let me go back into 6 months. We are in a loss territory again, which is a good sign. And look at how we had a huge gain for just a very brief moment yesterday. That's very interesting to me. The biggest gain over the past 6 months occurred here on November 15th, right at the time Ethereum and of course many other assets dropped off a cliff. And we've seen not much since. I'd like to see a little more. Let me zoom in just so we can see it a little more closely without that huge spike dwarfing everything. I'd like to see a little more negative territory here, but it did have this big dip here that coincided with the bottom. And more granularly, we can see that it's actually moved just barely into positive territory. But unless you see a huge spike here on the positive side or on the negative side, like we saw here, not much to really pay attention to for network realized profit loss. This is the kind of metric that you really want to pay attention to just in the case where extremes are happening. And right now, we're sitting pretty neutral. Exchange flow balance, also looking pretty neutral right now. We saw a huge inflow fluctuation right here, followed by a big outflow right after. Who knows exactly what caused that, but the volatility didn't really mean too much for the price. It kind of went down very briefly and then back up, and it's following kind of the trend of Bitcoin right now. More or less, exchange flow balance is flat and neutral at the moment. Supply and exchanges has been actually quite interesting. Let's look at the last year. For the first time, really, we're seeing kind of a sustained rise of Ethereum on exchanges. It isn't a significant one, but we rarely, other than maybe like right there, and yeah, that's about it. Other than, in mid-July up until early August, we rarely see this much of a sustained growth in the supply of Ethereum moving back to exchanges. So that's going to be a bit of a concerning sign. That means there's going to be a slightly higher risk of further sell-off that can occur, but it isn't a major one, especially compared to this big drop that we saw from the 14th to the 15th right there. You can clearly see that compared to a year ago, when supply on exchanges was around 22.7%, the number now sits at 13.9%, which is absolutely amazing to see just how much has moved into, DeFi and other types of platforms that people are interested in keeping their Ethereum on as opposed to exchanges. So more or less, even though things have moved up here in the last month, it's a pretty minor move up. I'd call this neutral to semi-bullish because the long-term trend still very much favors the fact that Ethereum is moving away from exchanges and not onto them. And that is the recap of Bitcoin and Ethereum for the end of the year, guys. I know this is a lot of information. I hope that it's helpful, especially to some of you newbies to the Sentiment community who are learning about how to use these metrics effectively. We are available on Discord. Going into the new year, we will be answering many questions and coming up with many new webinar subjects to give you guys some further insights as to how to use these metrics well. Overall, Bitcoin and Ethereum are looking pretty dicey right now. Plenty of bullish metrics, plenty of bearish metrics, but overall, we're waiting for a few things to turn a little more positive before it's going to be pretty clear to our community that it's buy time. Obviously, the timing here at the end of the year can make things pretty dicey, and people are celebrating. Holidays can traditionally be very volatile times, but going into the new year, there's very likely going to be some sort of shift that gives an indication as to whether people are panicking because of a further drop off or becoming euphoric because there's suddenly a big jump where Bitcoin's heading back toward 50K. It's very difficult to predict right now, but when combining all of these different metrics together for Bitcoin and Ethereum, it can give you a pretty nice gauge as to how risky it is to keep your portfolios the way they are. And hopefully we just continue to work together and talk in our Discord channel, our server, to come up with solutions for how to optimize trading further and further, because it's been an amazing experience growing with all of you in 2021. Of course, don't forget that we have a promo code right now, SANHolidays21, that will give you 35% off of your first month purchase to be a Sandbase Pro member with us. It's already only $44 a month, so I believe the 35% drops it down to $27, $28. And you get great value out of it, guys. I really would advise you to give it a shot and just see how all of these metrics can really enhance your trading. Don't forget that when you make a new Sentiment account, you get 2 weeks free to really explore all of this with us without having to be a member yet. All of that said, much love to everyone. Please stay safe and warm, and we'll talk to you in 2022.